unit sales, all of them were below expectations. EPS of 99 cents. Street was expecting $1.05. Revenue below expectations. Vehicle sales down 4.1% compared to last year. By the way, that's wholesale as well as retail vehicle sales. But this is the stat that really spooked the street about CarMax and the results that they posted.
Car dealers across America are panicking. Thousands of new vehicles are sitting on lots for hundreds of days with no buyers in sight. November 2025, data reveals the most alarming inventory glut we've seen in years, with some models taking nearly a full year to sell through current stock. This isn't just a small market adjustment, it's a full-blown crisis for dealerships who made catastrophic inventory decisions that are now coming back to haunt them. What's happening right now in the auto industry should terrify anyone with money invested in car dealerships or manufacturing. 10 major brands are currently sitting on inventory that will take up to 332 days to clear, more than 4 times longer than the 75-day supply that's considered healthy. Dealers are getting desperate, slashing prices and offering unprecedented incentives just to move metal off their lots. But here's what most people don't understand about this inventory disaster. These aren't just random models failing to connect with consumers. The vehicles languishing on dealership lots tell a much bigger story about a fundamental shift in the American car market, a shift that many dealers and manufacturers completely failed to anticipate. The warning signs were there months ago, but dealerships kept ordering the wrong models at the wrong prices, creating a perfect storm that's now threatening their very survival. What exactly is causing this inventory crisis? Which specific models are becoming financial anchors for their dealerships? And with interest rates still elevated, is this just the beginning of an even larger market correction that could reshape the entire retail automotive landscape? That's what we're exposing today. The consequences of this inventory buildup extend far beyond just dealer profits. For car shoppers, this crisis creates both opportunity and risk. While discounts on these slow-moving models will be substantial, buying a car that dealers can't sell raises serious questions about future resale value and long-term ownership costs. With some models sitting at more than 300-day supply, the market is sending a clear message about which vehicles American consumers have rejected. Let's dive into the 10 vehicles dealers can't give away, analyze exactly why they're failing so dramatically, and show you how to use this information whether you're in the market for a new car or simply trying to understand where the auto industry is headed next. The inventory crisis by the numbers. Before we get into the specific models, let's understand what we're looking at. The industry standard for a healthy inventory is around 75 days supply. This means dealers have enough vehicles to sell for about 75 days at the current sales pace. Not too many, not too few. When that number doubles or triples, it signals a serious problem. What we're seeing in November 2025 is unprecedented in the post-pandemic market. After years of inventory shortages that gave dealers the upper hand, the pendulum has swung dramatically in the opposite direction. For certain models, we're seeing inventory levels that would take nearly a full year to sell through at current demand. A catastrophic situation for dealers who are financing that inventory at today's interest rates. The financial impact on dealerships is severe. Every day a car sits on a lot costs a dealer approximately $35 to $45 in financing expenses, not counting depreciation, insurance, and other carrying costs. For a vehicle sitting for 300 days, that's over $10,000 in carrying costs alone, often wiping out any potential profit margin and pushing dealers into a loss on each unit. This is why you're starting to see truly desperate measures at dealerships across the country. Discounts of 15 to 20% below MSRP are becoming common on these slow-moving models, and some dealers are selling vehicles below their invoice cost just to generate cash flow and clear space. The days of dealer markups and market adjustments are over for these inventory pariahs. What makes this situation particularly alarming is that it's happening despite manufacturers already cutting production on many models. The vehicles on our list aren't being overproduced anymore, they're simply being rejected by the market regardless of availability. This signals a deeper problem with product planning and consumer preferences that could take years for some brands to overcome. Now let's look at the 10 specific models that dealers simply cannot sell right now, starting from the least worst and working our way up to the absolute disaster sitting on dealer lots nationwide. The 10 cars dealers can't give away. Number 10. Mini Cooper Hardtop 2-Door, 197 days supply. The Mini Cooper Hardtop 2-Door kicks off our list with a staggering 197 days of inventory, more than double what dealers should have. There are currently 2,747 of these vehicles sitting on dealer lots nationwide, yet dealers only managed to sell 628 in the past 45 days. With an average price of $37,322, the Mini isn't particularly expensive in today's market. But that price point reveals part of the problem. It's nearly double what the original affordable Mini cost when it was reintroduced to America. The Mini Cooper has gradually abandoned its budget-friendly roots and moved up market, but buyers aren't following. What's particularly troubling for Mini dealers is that this inventory glut comes despite BMW, Mini's parent company, already reducing production. These aren't new vehicles flooding the market. They're existing inventory that consumers are simply ignoring month after month. A former Mini sales manager in Boston explained the situation. The problem isn't just the price. The Mini Cooper hasn't had a full redesign in years, and customers coming into the showroom can immediately see that it feels outdated compared to newer competitors. We're stuck with a product that doesn't match its price point. The situation creates a painful dilemma for the approximately 115 Mini dealers nationwide. With each location averaging nearly 24 unsold hardtops, they're facing significant financial pressure from a brand that represents a tiny fraction of the overall market. Number 9. Jeep Compass. 198 days supply. The situation at Jeep dealerships is even more alarming. The Compass is sitting at 198 days supply, with 21,358 units clogging dealer lots nationwide. Across 2,375 Jeep dealers, only 4,843 Compasses sold in the past 45 days. What makes this particularly troubling is the price point, under $32,000 in a market where affordability is supposedly a major concern. The Compass should be selling well as Jeep's affordable entry point, but customers are clearly rejecting it in favor of competitors or other Jeep models. Industry analyst Maria Rodriguez points to several factors. The Compass suffers from being caught in the middle. It's not as capable off-road as other Jeeps, not as fuel-efficient as Japanese competitors, and not as well-appointed as Korean rivals at the same price point. It's a vehicle without a clear identity in a market that demands specialization. For Stellantis, the parent company of Jeep, this inventory problem couldn't come at a worse time. The company is already facing challenges across multiple brands and needs its volume models to perform. With an average of 9 unsold Compasses at every Jeep dealership, the financial burden on the dealer network is substantial and growing every month. Number 8. Mercedes-Benz SL. 199 days supply. Moving up the price spectrum dramatically, the Mercedes-Benz SL Roadster sits at 199 days supply. There are 539 new SLs nationwide, with only 122 sold in the past 45 days. With an average price of $163,000, this represents over $87 million in stagnant inventory. The SL's presence on this list breaks the pattern we often see where luxury vehicles maintain stronger demand even in challenging markets. Mercedes dealers are now stuck with expensive inventory that's proving nearly impossible to move, even with substantial discounts. The new SL faces several challenges, explained luxury car market analyst Jonathan Way. It's significantly more expensive than its predecessor. It's entered a declining convertible segment, and it's competing against newer and more exciting models from Porsche and even electric alternatives that have captured the attention of luxury buyers. For Mercedes dealers, having even 2 or 3 unsold SLs represents a significant financial liability. The floor plan financing costs alone on a $163,000 vehicle can exceed $200 per day, turning these showroom beauties into financial burdens with each passing week. Number 7. Nissan Versa Sedan. 201 days supply. In a particularly troubling sign for the affordable car segment, the Nissan Versa Sedan appears at number 7 with 201 days supply. Across approximately 1,500 Nissan dealerships nationwide, 14,788 Versas sit unsold, with only 3,295 moving in the past 45 days. At $21,000, the Versa is one of America's most affordable new cars, which makes its appearance on this list particularly concerning. If dealers can't sell new cars at this price point during an affordability crisis, something is fundamentally wrong with either the product or the market. The Versa's situation reveals a harsh truth about today's market, said automotive economist Paul Smiley. Even with concerns about affordability, consumers aren't willing to sacrifice features, technology, and perceived quality just to save money. They're either stretching their budgets for better vehicles or staying out of the new car market entirely. For Nissan dealers, the Versa inventory represents a significant challenge. With an average of nearly 10 unsold units per dealership, these entry-level cars are taking up valuable space that could be used for more profitable models while generating minimal return on investment. Number 6. Ford Mustang. 201 days supply. The iconic Ford Mustang finds itself in a troubling position. With 201 days supply nationwide. Across 2,800 Ford dealerships, over 18,000 Mustangs sit unsold, with only about 4,000 moving in the past 45 days. The average price point of $50,000 tells part of the story. The Mustang's presence on this list signals a dramatic shift in the sports car market. While previous generations were considered performance bargains, the latest models have moved up market in both price and positioning, apparently beyond what the market will bear. Industry consultant Thomas Johnson sees this as part of a larger trend. The Mustang has gradually evolved from an affordable performance car to a near-luxury item. At $50,000, it's competing with entry-level European luxury cars and a wide range of SUVs that offer more practicality. Ford has pushed the price to a point where the traditional Mustang buyer can't afford it, and luxury buyers aren't interested. For Ford dealers, this inventory glut is particularly painful. The typical Ford dealership now has 6 or 7 unsold Mustangs, each one representing significant capital tied up in slow-moving inventory during a period of high interest rates. Number 5. Volvo XC90. 210 days supply. The situation at Volvo dealerships is even more concerning. The XC90, Volvo's flagship SUV, currently sits at 210 days supply. Across 282 Volvo dealers nationwide, 15,642 XC90s remain unsold, with only 3,149 selling in the past 45 days. With an average price of $71,761, this represents over $1 billion in stagnant inventory across the Volvo dealer network, an extraordinary financial burden for a relatively small manufacturer. What makes the XC90 situation particularly alarming is that this is supposed to be Volvo's volume model and profit center. Each Volvo dealership is currently sitting on an average of 55 unsold XC90s, an inventory level that would be concerning for a mainstream brand, let alone a niche luxury manufacturer. Volvo's inventory problem reveals a broader issue with the brand's current positioning, explained European auto market specialist Emma Nielsen. They've moved aggressively upmarket with their pricing, but the vehicles haven't evolved enough to justify the premium over competitors. At over $70,000, the XC90 is priced similarly to the BMW X5 and Mercedes GLE, but doesn't have the brand cachet to support that positioning. This inventory situation represents an existential threat to many Volvo retailers who depend on the XC90 for the majority of their sales volume and profitability. Number 4 and 3, Audi A6 and A4, 224 and 228 days supply. Audi claims 2 spots on our list, with both its midsize A6 and compact A4 sedans struggling to find buyers. The A6 sits at 224 days supply, with 5,555 vehicles nationwide and only 312 sold in the past 45 days. The A4 fares even worse at 258 days supply, with 2,411 vehicles and only 420 sales. With average prices of $67,000 for the A6 and $55,000 for the A4, Audi's sedan lineup represents nearly $500 million in stagnant inventory across the brand's 322 U.S. dealers. This dual appearance on our list signals a deeper problem for Audi, which has lost significant ground to Mercedes-Benz and BMW in recent years. While Audi's SUVs continue to sell reasonably well, its traditional sedan lineup has fallen out of favor with luxury buyers. Audi's sedan crisis reflects both market shifts away from cars toward SUVs and specific issues with Audi's current product lineup, said luxury auto analyst Rebecca Park. The A4 and A6 haven't received the same level of investment as competitors, and their designs have become increasingly conservative while BMW and Mercedes have taken more risks. At these price points, luxury buyers expect to be excited by their purchases, not just satisfied. For Audi dealers, having both volume sedan models on the slowest selling list creates a compound problem. The average Audi dealership is now sitting on 17 unsold A4s and A6s combined, inventory that will likely require substantial discounting to move. Number 2, Maserati Grecale, 301 days supply. The situation becomes truly dire with the Maserati Grecale sitting at 301 days supply. Across 92 Maserati dealers nationwide, 675 Grecales remain unsold, with only 101 moving in the past 45 days. At an average price of $82,255, the Grecale represents Maserati's attempt to capture a piece of the lucrative luxury SUV market. However, the market has clearly rejected this offering despite significant marketing investment from the brand. The Grecale's failure is particularly costly for Maserati because this vehicle was supposed to be their volume model and future profit center, explained luxury brand consultant Alessandro Rossi. They invested billions in development and manufacturing capacity only to produce a vehicle that consumers simply don't want at the asking price. The problem isn't just the vehicle itself, it's that at $80,000, buyers have numerous options from more established luxury brands. For Maserati's dealer network, the Grecale inventory represents an existential threat. With an average of 7 unsold units per dealership and minimal customer interest, these vehicles could sit for another year or more without significant price reductions. Number 1, Jaguar F-Pace, 332 days supply. Taking the unfortunate crown as America's slowest selling vehicle is the Jaguar F-Pace, with an astonishing 332-day supply. Across 349 Jaguar dealerships, 2,299 F-Paces sit unsold, with only 312 moving in the past 45 days. At $71,000 on average, this represents over $160 million in stagnant inventory, a financial burden that the struggling Jaguar dealer network can ill afford to carry. The situation is even worse than the current numbers suggest. Many of these vehicles are actually 2025 models that have been sitting on lots for over a year, and some 2026 models have already been on dealer lots for over 200 days. This means the actual age of this inventory is even older than the official day supply figure indicates. Jaguar's situation is nothing short of catastrophic, said British auto industry expert William Harris. The F-Pace should be their volume model, but it's been completely rejected by the market despite being in the popular luxury SUV segment. This suggests fundamental problems with the product, the brand, or both. At this point, many dealers are questioning the viability of the Jaguar franchise altogether. With an average of nearly 7 unsold F-Paces per dealership and minimal customer interest, Jaguar retailers face difficult decisions about how much they're willing to discount these vehicles just to generate some cash flow from this stagnant inventory. Why this inventory crisis matters. This inventory disaster tells us something critically important about the current state of the automotive market. After years of shortages that gave dealers unprecedented pricing power, the pendulum has swung dramatically in the opposite direction for specific models and brands. This isn't just a cyclical adjustment, it's a rejection of certain vehicles and pricing strategies that could force fundamental changes in how cars are built and sold. For manufacturers, the message is clear. Producing vehicles that don't precisely match consumer preferences at acceptable price points is no longer viable. The days of pushing unwanted inventory onto dealers and expecting them to somehow move it are over. Today's consumers have too many options and too much information to be sold vehicles they don't want. What's particularly alarming about this inventory crisis is that it's happening despite manufacturers already implementing production cuts across many models. These aren't vehicles that are being overproduced today, they're vehicles the market has fundamentally rejected regardless of availability. For dealers, the financial implications are severe and worsening by the day. Floor plan financing, the loans dealers take out to purchase inventory, typically comes with interest rates 1 to 2 percentage points above prime. At today's rates, carrying a $70,000 luxury vehicle costs a dealer approximately $90 per day in financing expenses alone. Multiply that by hundreds of slow-moving vehicles and hundreds of days, and you're looking at a financial catastrophe for many retailers. This is why you're starting to see truly desperate measures at dealerships across the country. Discounts of 20% or more below MSRP are becoming common on these models. Dealer-added accessories are being thrown in for free, and some dealers are even selling vehicles below their invoice cost just to generate cash flow. For consumers, this creates extraordinary buying opportunities on specific models, if you're willing to accept the market's verdict on these vehicles. The buying opportunity of the decade. For car shoppers, this inventory crisis creates what might be the best buying opportunity we've seen in years. Dealers are desperate to move these vehicles and are offering unprecedented discounts just to get them off their lots. If you're in the market for any of the 10 vehicles on our list, you're in an extraordinarily strong negotiating position. Dealers know exactly how many days these cars have been sitting, and they're watching the carrying costs accumulate daily. Many are now willing to sell these vehicles at or below their invoice cost just to convert them to cash. How much can you save? Based on reports from our industry sources, here are the typical discounts we're seeing on these models right now. For mainstream models like the Jeep Compass and Nissan Versa, dealers are offering 15 to 20% off MSRP, plus additional manufacturer incentives that can bring the total discount to nearly 25%. On a $30,000 Compass, that's a savings of up to $7,500 compared to what you would have paid just a year ago. For luxury models like the Volvo XC90 and Audi A6, discounts are even more dramatic. We're seeing 20 to 30% off MSRP on many of these vehicles, which translates to discounts of $15,000 to $20,000 on models that dealers simply cannot move otherwise. The most desperate situations are at Jaguar and Maserati dealerships, where some retailers are offering 35% or more off sticker prices just to generate some return on their aging inventory. We've documented cases of new Jaguar F-Paces selling for $45,000, a discount of nearly $30,000 from the original MSRP. But before you rush to take advantage of these fire sale prices, consider the longer-term implications. Vehicles that dealers can't sell when new typically face even greater challenges in the resale market. The same factors that make these cars undesirable as new vehicles, outdated technology, questionable styling, poor fuel economy, or reliability concerns, will make them difficult to sell when you eventually want to trade up. Additionally, vehicles with publicly known inventory problems tend to depreciate more rapidly than their peers. When everyone knows dealers couldn't sell a particular model, private sellers and trade-in values suffer accordingly. That amazing deal you got today could turn into a financial anchor 3 or 4 years from now when you try to sell or trade the vehicle. This is why we recommend a selective approach to taking advantage of today's buyer's market. If you plan to keep the vehicle long-term, 7 to 10 years or more, and the model meets your needs despite its market rejection, these discounts represent genuine opportunities. But if you typically trade vehicles every 3 to 4 years, the accelerated depreciation on these market-rejected models could easily erase any upfront savings. What this tells us about the future of car buying. The current inventory crisis signals a fundamental shift in the power dynamics between manufacturers, dealers, and consumers. After a brief period where dealers and automakers held all the leverage, consumers have regained the upper hand, at least for specific models and brands. This shift is likely to accelerate several trends that were already emerging in automotive retail. First, we'll see more accurate production planning from manufacturers. The financial pain of this inventory glut will force automakers to better align production with actual consumer demand rather than optimistic sales projections. This will mean fewer instances of massive overproduction, but also potentially fewer configurations and options as manufacturers streamline their offerings. Second, the dealer ordering process will become more consumer-driven. Rather than dealers guessing what might sell and ordering accordingly, we'll see more emphasis on building vehicles to match specific customer requests. This approach reduces the inventory risk for dealers while giving consumers more of exactly what they want. Third, pricing transparency will continue to increase. As dealers compete more aggressively for buyers of slow-moving models, we're seeing unprecedented openness about dealer costs, available incentives, and profit margins. This transparency, once established, will be difficult to roll back even when market conditions eventually change. Finally, we're likely to see further consolidation among dealership groups, particularly for struggling brands like Jaguar and Maserati. The financial strain of carrying months of unsold inventory will prove too much for some smaller dealers, leading to buyouts by larger, better capitalized groups who can better weather these inventory storms. For consumers, these changes should ultimately lead to a more rational, transparent car buying process, one where the vehicles being produced more closely match what people actually want to buy, at prices they're willing to pay. The bottom line, act now if you're in the market. If you're currently shopping for a new car, the data we've presented creates a clear roadmap for finding the best deals available. The 10 vehicles on our slowest sellers list represent extraordinary buying opportunities if, and this is a big if, they meet your needs and you understand the potential long-term implications for resale value. Here's our advice for navigating this buyer's market. First, use this information as leverage. Dealers know exactly how long these vehicles have been sitting and what they're costing and carrying charges each day. Don't be afraid to make aggressive offers significantly below MSRP. The worst they can say is no. Second, consider the total ownership cost, not just the purchase price. A heavily discounted luxury vehicle might seem like a bargain today, but maintenance, insurance, and depreciation costs don't get discounted along with the MSRP. Make sure you're prepared for the true cost of ownership before being seduced by a steep discount. Third, consider certified pre-owned alternatives. Many of these slow-selling models are also available as manufacturer-certified pre-owned vehicles, often with significant additional discounts compared to new models and the security of an extended warranty. This can provide a way to mitigate some of the depreciation risk while still taking advantage of today's buyer's market. Finally, don't rush your decision just because deals are available now. This inventory situation didn't develop overnight, and it won't be resolved quickly either. The vehicles on our list will continue to be challenging for dealers to sell for months to come, and the discounts are likely to get even deeper as year-end approaches and dealers face increasing pressure to clear their lots. Remember that for free, localized data on the slowest selling vehicles in your specific area, you can visit carriage.com/slowest and enter your state and city. This will show you exactly which models are sitting longest at dealerships near you, giving you even more precise information for your negotiations. Found this information valuable? Hit that subscribe button and share this video with anyone in the market for a new car. Your support helps us continue bringing you the most in-depth analysis of the automotive market. In our next video, we'll be examining which models are still commanding premiums despite the overall market slowdown and why some vehicles continue to defy the trend toward buyer's market conditions. Until then, remember that in today's market, knowledge truly is power. And now you know exactly which vehicles dealers are desperate to get rid of.